Well, hello and welcome everybody to another trader development course. This time it's on the vertical debit spreads using TradeBench. So let's get right into it, shall we? First thing we want to do, folks, is we want to break down what we're trying to put into TradeBench. Let's go straight to the directional options class, vertical debit spreads, unit 1, which is the course you guys just took, and you're now experts at it, right? You've memorized the PDFs. Okay, that was a joke. What we want to do is try to make this as seamless as possible. What we have here is our two worksheets. We have the fillable PDF when it comes to the bull call and the bear put. We also have blank PDFs just in case, folks, you wanted to add or subtract different criteria. A lot of traders like to be a little bit more aggressive out of the money spreads versus in the money versus like what Maverick here has, kind of a happy hybrid between the two, and in and out of the money vertical spread. So whatever you guys want to build, what we're going to do is I want to convert these PDFs into checklists for the specific strategy using TradeBench. So let's start with a bull call spread just to see what you guys are, just to let you know what you're looking at. I'm going ahead and pull this up. It looks like I need to hit this button here to kind of fit it to my screen. Now from this point, I love it because you can copy and paste this. I use a little snippet tool. You can see it down here on the lower left. If you guys don't know where it is, just go ahead and Google snippet tool. They're free, and you can cut it and put it directly into the strategy area when it comes to the TradeBench. So a couple things that I focus on specifically: the entry criteria. This is what Maverick has. You can add. This list can be as long as you need to when it comes to the criteria that you need to see to get into this specific strategy. The second thing I look at is the stock outlook. Is this a bullish, bearish, or sideways kind of a trade? In this case, the bull call can be aggressive. You can see it as +2. It could also be kind of sideways, the +1. And what's neat about this, guys, is when it comes to the progression of the long calls and long puts, which are very directional, this negates volatility in the same time reference, meaning vertical spreads are usually, you buy and sell in the same expiration cycle. So this can actually take away a lot of time decay. It can take away volatility fluctuations. So this can have a little bit more of a sideways element to it. So that's why we give a +1 to a +2. It is still a quote-unquote vertical spread, which means it needs price direction to make the majority of its money. But based on where it's placed, we have some flexibility. So I don't need to reteach the class, guys. Let's just go ahead and put this into TradeBench. Now let's jump into our TradeBench and let's go straight to our strategies list. And you can see what I'm looking for. I've put them all in previously. I'm going to touch base on each one of these as we go. But we're looking specifically for the bull call spread debit, which is right here. I'm just going to go ahead and edit this. Now if you guys wanted to add that trade, you'd hit add new trade and you'd type it in. It'd come up just like this. You'd have to type in bull call spread. I like to put the debit in there in parentheses to let me know that this is actually going to cost me money up front. This really helps me when it comes to position sizing, especially if I'm going to go max gain, max loss. The source, I don't want to type Maverick in every single time I hit a source, so I left it blank. Now, folks, if you find the source outside of Maverick, you found it in a book, you found it in another company that you researched, or another any sort of education you had outside of Maverick, go ahead and type it in there if you want to. It's kind of neat. That way, if you find some sort of exotic strategy, you can just go ahead and put, hey, I found this off of Tasty Trades. There's one for you. Stuff like that. It's an active strategy, so make sure you check this box. That way, whenever you go to your trade plan up here and you hit use existing full trading plan or without a plan, we've differentiated between the two, which I will here in a second. It will pop up as a choice. Just always check this box. Now, checklists. I've only built long calls and long puts because that's the courses we've only taught to this point. So we need to build a bull call spread debit checklist for the strategy. And guess what it's going to be, folks? You guessed it. Entry criteria is going to be right there. I'm just going to basically regurgitate the same stuff. So go ahead and hit submit once you've built this. I don't have to because I've already built one. But one thing I have not done is I've got to go to my checklists, and let's build a checklist specifically for the bull call spread. I just hit add checklist here. I'm going to type in bull call spread. Oh, looks like I've already done it, right? Hit submit. And once this builds, I can see that now I can just add, view, or edit it. So I'm just going to go ahead and add because we need to add new checklist items. The first one I want to add is, I think I had this in here, but I guess I didn't. Net delta greater than 0.55. Now and this is going to be manually. We're going to have to manually check this. It's easier to run the math according to what you see in the list than it is to try to figure it out how to calculate it, right? Or excuse me, build a spreadsheet that does it. Any sort of additional info, I don't need it. It's pretty basic, net delta greater than 0.55. I can do that in my head. So I'm just going to go ahead and hit submit on this. Now, folks, what I'm going to do here, sorry, I had to move that out of the way. So the next thing is we just kind of move on down that list. What's this render? So there it is. Net delta greater than 0.55. Okay, that's awesome. So let's add another item. And this is going to be 2 to 4 weeks in time. Now, folks, this isn't really this isn't concrete. You can actually do a vertical spread as far out as you want. However, the way the Maverick trades it is a little shorter term. If we want to go longer term on stuff, there are other trades out there that are a little bit better, so on and so forth. So it just depends on what you want. These things could be a month out in time. It really just depends on it. But more importantly, within your time frame is what I want to make sure you guys see. If you've got something you're looking for 5 weeks, well, make sure you buy yourself at least 5 weeks at a time, right? Maybe somewhere between 3 to 5 weeks or 3 to 6 weeks in time, so on and so forth, because there is a gray area when it comes to these. Once again, this will manually be checked. You can add any other notes you want. Let's go ahead and hit submit. And we'll move on to the next checklist or entry criteria item. Like I say, once again, folks, I'm just typing in the Maverick stuff. You guys can put in whatever you want. The next one on the item here, as I go to build it, is going to be sell the closest strike price to the target. I'm going to add something to that because I thought this was kind of cool, and it doesn't really change much on Maverick's look. But I'm going to say sell closest strike price. Oh, it's right there, to the target price. How about, now I'm going to add this to it because I want to make sure that I don't sell it below my target. So I'm going to sell the closest strike price, the closest strike to the target price above, and that'll do it. Because what I'm going to do is if I can sell the closest strike price to the target price, how about this? Let me reword that, folks. That's a big mouthful. Sell the closest strike price above target price. Sorry, folks. I have to, type A here. There we go. So now I know that if I've got a target of $58, I'm going to sell the I'm going to sell the 60. Or if I've got a target price of $74.99, just sell the 75. But I don't want to go lower. So let's say that I have a target price of $72.50. But I only have the choices of a 70 and a 75. I'm going to sell the 75. So it has to be sell closest strike above target price. I don't want to give away potential gains. All right, the last one I'm going to add, which is part of the curriculum here, reward to risk, and I have it written down, of at least 1-to-1 ratio. Now, if you're doing vertical spreads in and out of the money, and you have the higher probability, meaning you're putting on a 0.55 delta, understand, folks, that you have a 0.55 or greater percent of that being correct. So if I've got a 0.60, 0.75, 0.80, if my net deltas increase, by default, my reward to risk ratio will decrease. If I've got an 80% chance of success, I'm probably going to get 30 cents on the dollar. If I've got a 20% chance of success, I'm going to get 80 cents on the dollar. Everything's relative. You'll figure this out as you move through the courses. Okay, so I'm going to hit submit on that, and I have built myself a bull call spread checklist. Now, once this renders and pops up, the next thing we need to do, guys, is we need to add it to a specific strategy, which is going to be the bull call strategy. There it is. Okay, so here's our lists. I only have 4 things here. You guys could put in as many as you want. So I'm just going to go ahead and go back to checklist. That way you can see that it says bull call spread, debit. I have 4 items attached to it. So I love it. It's great. So let's jump straight to strategies. And let's go back to our bull call spread. I'm going to hit edit. And there it is, the bull call spread debit. I'm going to add that checklist to it. Go down here and hit submit. So let's go ahead and build ourselves a trading plan based on a setup. So let's go to trades, using existing full trading plan, which we have to build a new one. All right, now guys, I already had one built, so let's talk about one that I found. This, as I have to drag this over, folks, this is Travelers, and this is a trade that I thought would be a really good opportunity. It just had its earnings. It did pretty decent, but it has this nice little high base here at about 150. One thing that I liked about this trade, and I don't want to get too deep into the trade, folks, I just want to put it into the trade bench, but I like the fact that it's got this nice climbing area where this thing could potentially continue. I'm just going to shrink this down and see that line. Isn't that kind of nice? So this has an ATR currently here at about $1.98. Let's call it $2. So this thing's pretty aggressive. Now I know it costs a lot. You know, it's a $150 stock. But I'm thinking within a month's time, I'm just going to go, today's the 10th of June. Let's go over to the 10th of July. Somewhere around there, based on this line, I could expect about 160, right? Just shy of the 160 mark. So let's go out and see what we have to choose from when it comes to the charts. Or I should say the chains, options chains. So I'm going to go ahead and close this. And you can see that this does not give us weeklies. We have the choice of 11 days out or 39 days out. Now I know in 30 days this thing should be close to 160, 158, 159, somewhere around there. 11 days isn't going to do it. Now 39, that's 9 days longer than I want, but guess what? As of the choices, I'm not going to go 130 days out, so I believe that July 19th is going to be the best choice for us. Now let's see what kind of options, or excuse me, strike prices we have. Looks like $5 increments. So I've got to take a look at what we have in front of us. Go back to the chart. Well, I've got a choice of a 150, 155, or 160. Now, folks, I want to sell the strike price closest to my target, but above, which is going to be 160. So let's go back to the analyze mark. We're stuck with the 39 days out, so we're going to be here. I'm going to go over to the call side and see what 160 is going to give us. Not much, about 25, 30 cents. So I'm going to go ahead and sell on that. Now, that being said, if I'm going to keep a net delta of 0.55, I need to find a delta of 80, don't I? So the first delta of 80 that I see is the 140 right here. So see, I'm going 81. Oh, sorry, folks, I got those numbers wrong. 0.9, 0.09 plus 0.55 dollars. Oh, 64. This becomes much, much easier because it's going to be a lot cheaper. So I need to look for the 145. So I'm going to buy the 145. Let's start that over. I have to control down. Buy this. Let's go to the 160. Hit control, sell. Drop this down. Now, folks, if you guys need to reference this, we have the Thinkorswim videos as well. So please jump onto those. And let's go ahead and hit risk profile on this. So we've got a combo that's going to cost us $6 to make $9. So that is basically 70%. Let's go 6.00 divided by 9.00 equals 0.6666. So we have a greater than 1-to-1 risk reward ratio. $6 to make 9. I'll take it. It looks pretty good. So the next thing we need to do is let's add it to our trade bench if everything looks pretty good. Now, guys, you can actually increase or decrease the amount of contracts based on your risk tolerance. In fact, this thing was $6. So understand that if you guys are risking $500, you're already priced out. Things of that nature, but that's okay. Let's just move forward based on what we have in front of us. So what I like to do when it comes to the symbol and direction, now with options it's going to be a little bit different, folks. We have to actually put in exactly what we're working with. I'm going to move this to the side so I can actually kind of just copy it over. And then I'll move it back for our next example. So this is going to be TRV, and then I put a little dash mark here. Now, I'm not going to get real-time quotes. It doesn't matter. If I want real-time quotes, I can get them from the trading platform I'm using. Thinkorswim, Trader Workstation, whatever you guys want, it's there. But this is just a recording software, so I need to put in TRV, and this is going to be the July, and I abbreviate it. You can type it in 19th, 2019, 145/160 bull call. There you go. Now the multiplier, you can put it 100 if you want, or you can leave it at 1 and type in 100 contracts. It doesn't matter to me. Or yeah, 100 shares. It's fine. Now, folks, this is a debit spread. We talked about this in the long call, long put. Debits are always long. Credits are always short. So I'm going to do a bear put spread here in a minute, and it's going to still be long. Okay? This is how we compensate for it. First of all, we're going to do a long, and it is a bull call spread debit. I click this. This comes up 2 to 4 weeks within our time frame. Yes. The delta greater than 0.55. Yes. Reward ratio was basically 0.6666 to 1. That is greater than 50/50. Closest strike price above the target price. Our target was about 57. We used the 160. Yes. So what's cool, let me uncheck this. It says over here that it's not fully checked, but once you check it, it's fully checked. So this lets you, this kind of like makes you go through the process once again. I love it. So we're going to do, let's do the interactive brokers on this one for fun. My planned entry price is definitely going to be the options combo. Remember, folks, we use the options combos prices, not anything past that. This is going to be 6.00. Our planned target price, if this hits max, 145 to 160 is $15. And the stop price is nothing. We're not going to use a stop on this. We've position sized for max loss. If that's true, you have to put in 0.01 because 0 times 0 is 0 times anything is 0, right? So keep that in mind. So that way we can get at least a correct calculation. Now it's not going to say that because it's going to say you're way above or way below what you're supposed to be. But we can fix that over here when it comes to risk, quantity, and commissions. So let's go to quantity. This is easy because it's $6. I'm going to go, whoops, I'm going to go one contract I did times 100, so that'll work. If I click away from it, it should calculate correctly. Total risk amount is $600.01, or 601. Why is that? Because it costs $1 to get into the position, $1 to get out. Commission is going to be $2, round trip, plus everything's going to be what it is. So the next thing we need to do is we need to select the labels. Now, folks, it's not the setup of the strategy, it's the labels that dictate if it's bullish, bearish, how aggressive, what we use, so on and so forth. So I'm going to add some stuff from the previous strategy we know to add. This is a +1, +2 strategy. Now, based on the chart that I saw, folks, I'm going to say this is basically a +2 because it's pretty aggressive, and I'm looking for a $15 move, or excuse me, a move up to 160 with a $15 spread. So I'm going to say it's aggressive. The pattern that we saw, you know what? I don't even need to guess. Let's go ahead and go back to it. I'm going to drag it over here so you guys can see it. All right, guys. Let's move this over. I'm trying to be as detailed as possible. This is a high base. This is a high base. 150 is resistance, ascending. Okay, how about an ascending triangle? It's an ascending triangle, very bearish. So I'm going to click on ascending triangle. +2, ascending triangle. Let's take a look at what other choices we have. Nope, no new highs, no new lows. In fact, we could probably add that if you wanted to. Let me try. Yeah, we could do new highs. Let's add that. New highs. Okay, so when you come to labels, folks, you can get as deep as you want. I'm gonna say this every time we do this, or you can be as shallow as you want. It depends on what you want to follow. So I've got a +2, ascending triangle, new highs. This is a bull call spread. Here's my numbers. Here's my cost. The checklist worked. Everything's looking really, really good. I used, here's the broker I used. This is the cost breakdown. Now, whatever you guys want to put in here, you can. I'm going to go ahead and leave it blank because I really just want to get through this and get to the next one. So I can go to submit which would hold it as a trading plan. Or I could hit submit and go to order entry because I'm ready to do this now. Now what's cool is the order entry says, okay, you know you wanted to buy this for $6, but did anything change? Did anything change? We set this up today, but let's say that it took 2 or 3 days to trigger. We can change it here. Let's say that the order quantity changed because we had to do less contracts because we paid more, or more contracts because we paid less. I'm going to leave the order quantity as the same, which was 1, I believe. The fill price, did it increase? Was it 601, 620, 625? Was it 589, 575? You know, I'm just going to leave it here because I want to make sure that everything works. And then it breaks down the commission, so on and so forth. Now, comments. Triggered above resistance. Triggered above a previous high. It took 2 days, but the market turned and this broke above whatever. All this needs to go right here. I'm going to hit submit. Because what I'm trying to do is I'm superseding, building a plan, waiting for it to trigger, going back to the plan, and setting it up. And there it is. Scroll down to it. Here is our Travelers, July 19, 2019, 145, 160 bull call spread. Quantity 1 at $6, cost us $600. Here's all the things, so on and so forth. It's all great. So once again, I'm going to add this. If you need to add a position, which you can add more contracts based on what you wanted to add to it, based on the cost basis of that. It will automatically take into consideration the new change and average it out. Add an exit order. Now, folks, I apologize because I believe in the calls and puts I did not exit the position, but this is exactly what you would do. And you know what? If you want me to, I'd walk through it, but it's pretty self-explanatory. You can edit your target. You can edit your loss. Just say, hey, target. You know what? I didn't think it was going to be $15. I thought it'd be $18. You know, in this, it's pretty black and white because you're doing it off of commission when it comes to the combo price. Now, the stop loss can be adjusted based on, hey, I think the stop loss is going to be a little bit higher. I didn't position size for max gain, max loss. I put it on a specific strike price. I put it on a specific stock price, so on and so forth. It just depends on what you want to do. But this can all be edited. Now, what's really cool, once again, I'm going to show you this. Here's the labels that we chose. If we wanted to add a new label, or change the label, say, oh, you know what? It's not a +2, it's a +1. You can change this here as the position is alive. Strategy. It's a bull call spread, debit, fine, so on and so forth. So you can do whatever you want as the trade is live. Now notice all my trades are open. I left these open on purpose, except for Adobe. I had that closed, so I can use that as another example later on down the road. So here I am. Everything's great. So let me go through exit, because I have not exited a position in any of these examples. It's very, very basic. Let's say the fill price, $15. Let's say it went to max gain. Commissions, all done. Submit. Now what this will do is it takes it out of existing positions, obviously, and goes to closed positions. But it dictates, calculates everything, every label I hit, and categorizes it. It's gone out of the existing positions, and it shows a closed trade. So check this out. This is where you get all this cool. I know it's kind of funny because it's one of those old school clips. If you guys have been around enough, old enough to know that you can clip those to paper. Not to date myself, but I remember those. Okay, so you can see trading plan summary. When you have a trading plan, when you execute the trading plan, it goes to actual trade summary. What actually happened? This is what we thought would happen. This is what actually happened. And then it breaks it down to, okay, entry 1, price 6, target 5, 15, 0 stop. This is the date. This is where I got out. This is the date. Over here, it's going to tell you our percentages, profit, $890, blah, 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 blah. It's all there. Now, go ahead and you can put it wherever you want. So I wanted to exit one trade because I haven't done that yet. Okay, so that is the bull call spread. Now, folks, a couple things. Look what I did here. You're not going to get live data off of the trade bench. You can if you go straight calls and puts. But remember what I said in long calls and long puts, which is directional options, unit 1. This is not conducive to options. We have to work around it. Okay, let's go back and let's see if we can't find ourselves a bear put spread. So I'm going to go back to configuration because we need to add a new strategy. I'm also going to go back to directional options, vertical debit spreads, and I'm going to click on bear put. All right, I'm going to make this fit. Okay, just want to make sure I am all in the same place. Here's the bear put spread. Very similar. Instead of a +1, +2, -1, -2. Entry criteria still 2 to 4 weeks out. Time frame does not change. When you are purchasing something, the ice cube melts against you. You need time. So whether it's buying a call or buying a put, you need 2 to 4 weeks out. Purchase strike price net delta greater than -0.55. Why is that? It's the exact same thing. You want a 0.55 delta negative, which is above average in the put side. Sell closest strike to target. I'm going to add closest strike to below target. Reward risk has to be 1 to 1. Everything's the exact same thing. Once again, you can cut, copy, paste. You can put this wherever you want when it comes to the trade bench. We'll go to configuration, strategies, which is where I'm at. And we're going to add strategy, which I already did. And it's going to be the bear put spread debit. So let's edit. Because what I haven't done is added a checklist. Bear put spread, still a debit. I copied and pasted the bear put spreadsheet here. Let's see if I still have it open. Drag it over here so I can type it in. Okay. So what we need to do is build a checklist for it. With the checklist, you can add checklists. Bear put spread. This is also a debit, folks. This costs us money, doesn't it? There it is, bear put spread debit. Let's go ahead and edit it. Let's add our first situation. This is going to be same as the other. Here's the best is I can actually just copy and paste it because 2 to 4 weeks out within your time frame, just like the bull call spread, isn't it? Awesome. Okay, manually checked. I don't care about adding anything to it. Let's go over here and submit it. It's going to take a second, but we'll get there. All right, let's add a new checklist item. Now this is going to be a little bit different. You can word it any way you want. You can say purchase strike delta greater than, I'm just going to say net delta greater than, how about less than? Yeah, less than -0.55. Now, why is it less than? Because the less the delta, the better it is for you to go down. I mean, it's kind of a silly thing because it's upside down. It's the same idea. Put delta is a negative annotation, where call delta is positive, but they mean the same thing. Think inverse, you'll be all right. So I'll just do that. Don't need to add anything else to it. I'm going to add my sell closest strike price to the target or above is going to have to go to be to the target or below. So I'm going to have to switch the wording, right, because I'm going down. But the reward risk will be, it's got to be greater than 1 to 1. That doesn't change. Okay, good. So we move back over here, add new checklist item. Let's do the tough one here. So sell closest strike price. See how this is above? I'm going to change that to below. Very easy to do. Submit. And the last thing we have to wait for is the reward risk ratio is greater than 1 to 1, and we can actually use the exact same thing we used for the calls or the bull call spread, because it's the exact same thing. Now what's going to throw a lot of people off here is the next step, and I'm going to say this every time I teach it because, folks, repetition works. Add new checklist item. Got to add the risk reward ratio, which is right. Reward to risk ratio of at least 1.1. Isn't that nice? Once you start typing these in over and over, you can actually use them over and over. Keep that in mind, guys. Options are just a combination of themselves. So a lot of rules that work for one strategy can work for another. Just depends on what strategy you're trying to build. All right, let this render. Back to checklists. I think we're good to go. There it is. So now that I have a bear put spread built, I have to go to my strategies and attach that checklist to it. So let's find it. Bear put spread debit right there. Hit edit there. Strategy source. Okay, this looks good. Bear put spread. There it is. Let's add that checklist and hit submit. Now I've got it. We're good. We should be good to go. Successfully added. So now the next thing we need to do is add or go find a trade. Let's go back to my... Now, folks, I spent the time and I found NRG. This is a cool one. I like this. It's kind of neat. I've already drawn the line that I was looking at. Once again, I always look at time frame. I look at average true range. I take a look at something, a potential target, and I like to always start at 30 days because I don't know if this has got 30 days or weekly, so on and so forth. So I take a look at today, which is the 10th. I move over to the 10th of the next month, and I correlate it with my line. It's about 2850. Okay. So let me jump over to the analyze part. Once again, you can do this any way you want. Just go back and forth and find out what you want to do. Oh wow. Oh, look at this. We've got all sorts of cool stuff. So I know I've got the choice between 32 days and 39 days. I just saw that I can get to 2850 in about 30 days, but I've got week 3 of, or excuse me, week 2 July. I also have week 3, which is regular expiration July. So let's take a look at what we can do here. Now, week 2 of July has 50-cent strike prices. Regular expiration of July, which is week 3, has dollar strike prices. Okay, I'm not worried about either of those. That's plenty of stuff to work with. All I got to figure out is how long it's going to take to get to one of these lines. Let's see. So I can get to 32 in about, oh geez, less than 30 days. Pull back down. Boy, let's do something shorter term. Yeah, wow, 32 looks pretty respectable. Let's go back to my analyze here. And remember, I want to be 2 to 4 weeks, so let's try 32. 30. That's going to give us plenty of time. So let's take a look at this. Ooh. You know what, folks? Let me triple check that. With an 85 cents, 1, 2, 3, 4, 5, 6, 7. I'm thinking 32 could be made in less than 30 days. Let's try 18 days. Now, guys, okay, I'm actually working through a whole bunch of I don't want to create a lot of questions, but to tell you the truth, we set these up based on 2 to 4 weeks, based on our target. That target looks pretty tight to me. It looks like it could be a little bit more aggressive, so I'm going to get shorter term. So I'm going to go ahead and see if I can't select that week 4 of June. So regular expiration, you can see, is week 3. Then there's a week after, which is 18 days out, which is over. What's that, 3 weeks? About 3 weeks? Almost 3 weeks. So let's see what numbers we have here. So my target in 3 weeks is about, let's call it 32 to be safe. So I'm going to start there and work backwards. So I'm going to find 32 puts. Okay, we're dealing right around here about, maybe about 20 cents as we can hope for. The delta is at 0.15. So in order to get a 5.5 delta, we have to add 0.55 to it. We're looking for a 70 delta to the downside. So we're going to have to place somewhere around the lines of 35.5. So let's see what that is. Let's go ahead and buy 35.5 and sell 32s. Right? Let's see what that looks like. As always, knock this down to 1 to make math easier. Let's go over to risk profile. Okay, so I'm risking about $1.35 to make $2.13. This is going to be close. So if you're ever worried about if it's 2 to 1 or not, just go ahead and type in the numbers. 1.37 divided by 2.13, and that's a 0.64 return risk ratio. That is definitely above 50-50. So this works. This works. So let's see if we can't work this out. $1.37. Let's go back to the chart. That's what it's going to cost us. I'm going to go ahead and clear this set here as we go back to our trade bench, right? All right, so let's go ahead and do a full trading plan because I want to add our checklist to it. So this is a new trading plan. This is going to be NRG. And once again, folks, when you hit this, we can't just do the stock because we are doing an option. We have to put a little dash mark there. Let me go ahead and hit space dash space just to stay consistent. And then I'm going to put down, we have the June 28, 2019. I know I don't want to date this class, but I am. This is going to be a 3550 slash, hopefully slash works, 32 bear put spread. Okay, good. Now, folks, once again, I'm going to take my time with this. It is long. It is long. Why is it long? Why is it long? We are buying this position. We are buying it. This is not short. I know we want it to go down, but this is long. The strategy is long. Okay, we are going to purchase the bear put spread. Purchase. So if it goes down, the combo increases in value, which this software doesn't understand. But if you put it as long, it will understand that it will increase in value. How do we know if it's short? How do we know it's bearish? How do we know it's down? Labels. So let's continue through the process. This is a bear put spread, which is a debit, and it gives us our checklist. 2 to 4 weeks. Yes, we were just on the upside of 2 weeks. Delta worked fine. Reward to risk of at least 1-to-1 ratio. Yes, we're at 0.64 on that. Sell the closest strike price below strike price. We did. We got it just below it. It's actually working out pretty good. Now, we're going to use interactive brokers as well. Planned entry price. This is where we would put in the specific numbers of the option. I'm going to go ahead and move this out of your way so I can type it in, and because I'm pulling these numbers from here. Right? Okay, good. So you're going to have 137. Planned target price. Now remember, folks, your target price at max gain and max loss is the spread minus the cost. So I'm going to go ahead and hit 35.50 minus 32.0 is $3.50. $3.50 minus $1.37, which is our cost, equals a target price of 2.13. But that's the expected risk reward. The target price is the max gain of the spread, which is 3.5. Let me try that again, just in case you guys got lost here. 35.50 minus $32 is $3.50. The most we can make on this trade is $3.50, but we spent what? $1.37, so it'll take it out. Now the planned stop, if we position size for max loss, is going to be 0.01. Remember, 0 times anything is 0, so 0.01 times whatever is going to be equal. Now this potential risk alert will say, based on our setup of our previous, or what our brokers will allow, it's going to say this is a big deal. Now we need to get into, how many shares we're going to buy. Now, with a planned entry price of $1.37, 1.37, and let's say that we can risk 2% of $25,000, that's $500. What's cool about this is I can go $5 because $500 divided by 100 is 5, and I could divide that by 1.37, and that will give me a contract amount. In this case, it's 3.64 contracts. I don't want to buy 3.64 contracts. I'm going to have to round that down I'm going to put the multiplier back up to 100 to 3 contracts. Okay. Now what you're going to see is everything's going to start to work. 3 contracts times 137 is actually $410 plus our commission entry and exit round trip, and we are well above it. Now, folks, I hit the enter button, which is why I already got to existing trade plans. I need to go back to edit. If you hit the enter button, which you guys have heard me do, instead of just clicking off of it, it actually moves it forward because there's a couple things I need to add. Labels. Now this trade, let me go back to the charts here, you guys can't see it, is not that aggressive. I'm going to give it a -1. It is a bear rally, definitely. Let's see what else I can add to this. It looks like that's about it. So it's a bear rally. I give it a -1. It is a bear put spread that's relatively shy when it comes to its the range and the size of the stock. So check it out. Even though you guys have up here long, we are long a bearish trade. Remember that. We are long a bearish trade. So this will work. It's a -1. It's a bear rally. So when you scan my bearish, my bear put spread, so on and so forth, they're all going to scan the same. However, it can't calculate unless you differentiate. Credit spreads are long, debit spreads are short. That's it. Direction can be compensated for with good labels. I know, okay, I beat you down enough. Any sort of comments you want to put in here, go ahead and type it in. That's totally fine. You can hit submit and wait for it to trigger and then trade it. But I don't like to do that. I want to go to submit and go to the order entry. And sometimes, folks, you're just going to copy exactly what you just did if it's already triggered and it's in. So for fun's sakes, we're going to do that once it loads. Now, oh, cool. So in this case, it went ahead to a plan. It didn't give that opportunity to me. So let's go ahead and go to add order entry. Proceed to order entry. It's saying, okay, hey, you understand that things change between that. That's fine. We're going to, and by the way, what I just did, folks, is I submitted this as a trade. Now this is a trade. You could have 5 or 6 or 10 of those pending, and you go ahead and hit add order entry, and you can make it a trade. Happens to trigger the same day, the same time. I'm going to leave this. The order quantity is not. It's not going to change. Oh, geez, folks, for the life of me, I can't remember what it was. I think it was 3. The fill price is the exact same, which is that $1.37. And we're just going to go ahead and you can put any comments. Hey, it went a little aggressive, more aggressive than I thought. It fell faster. The markets rolled over. Donald Trump tweeted this. I just said Donald Trump, which 4 years from now I might have, dated this class. But anyways, long story short, whatever information you want to put in there, go ahead. Usually, if it's the same day, it's not going to be that big of a deal. Let's go ahead and hit submit, and it'll go into the open trades category. Let's find it. There she is, NRG. Right there. At any time, folks, this is just an information software. You can edit your quantity. You can add new positions. They'll ask you what you buy them for. Make sure you put in the options price, and it'll adjust to where it's an average price. You can edit your target. You can edit your stop loss. If you want to take half the position, you can go to add exit order and take 1 contract, 2 contracts, and it'll still keep this open. You can adjust your target wider. Or you can, like I say, if you add that stop loss, you need to do it according to the options, not the stock. So I'm not going to go ahead and exit this. I already showed you guys how to exit it. It's very, very simple. I'll just let it go from here. If you've got any questions, you know how to get a hold of us, but that's the simplest way to use vertical spreads. Keep in mind, folks, these are both long positions. You've got long calls and you've got long puts. Puts are down, calls are up, I understand, but you need to choose long in order for this software to take advantage of it. All right, folks, thanks for joining me, and we'll talk to you next time. Bye, everybody.